So we are going to get started. Welcome, everyone. My name is Elizabeth Aloni. I'm with Schneps Media, the largest local media company in the New York metro area. We publish over 100 media outlets from Manhattan to Montauk, Philadelphia, and Palm Beach. And today we are thrilled to bring you this very important informational SONYMA webinar all about first-time home buyers. Really an important thing for first-time home buyers not to miss. And you're not, so we're thrilled you're here. We're lucky tonight because we're going to hear directly from a state of New York mortgage agency, SONYMA representative, regarding their mortgage programs. And SONYMA programs provide excellent benefits for first-time home buyers. We're also going to hear from other really critical people in the home buying process. So lots of great stuff. Let's go ahead and get started. First, let me introduce our panelists. I'd like to welcome first Delphia Munoz. Delphia is the AVP Business Development Officer for the State of New York Mortgage Agency, SONYMA. Delphia is responsible for collaborating with nonprofit organizations, financial institutions, and realtors across the 5 boroughs of New York and Long Island to support the growth of SONYMA. She's a dedicated advocate of affordable housing with over 20 years of experience in financial and mortgage banking industries. She grew up in Queens, I did too, and always understood the value of home ownership as she witnessed her parents work hard to be able to purchase their first home in Queens. Prior to joining SONYMA in 2016, she was a housing counselor with the Long Island Housing Partnership, where she worked with lenders, state officials, and local municipalities to provide first-time homebuyers with education and grants. She's passionate about educating first-time homebuyers and achieving the dream of home ownership, building wealth, and transforming not only their lives, but also the lives of generations to follow. Amazing. Welcome, Delphia.
Thank you. Good evening, everyone.
Good evening. Now, please welcome Veronica Ferraro. Veronica greatly enjoys helping first-time homebuyers and understanding the landscape of mortgage products and grants, and has a boundless capacity to carefully listen to her clients and assist them in identifying which product may work best for their particular needs. Veronica does an amazing job at bringing financial literacy to the communities that Emigrant Bank serves. She presents in both English and Spanish on topics such as budgeting and planning, first-time home buyer preparation and education, the basics of credit and identity theft prevention for all ages. She's made her home at Emigrant for 36 years, which speaks to her dedication and her commitment to this business. Welcome, Veronica.
Thank you very much, Elizabeth, and thank you again, Delphia, for accepting our offer. It's an honor to have you, and thank you, Dwayne, and thank you, Julian.
Thank you for that. As Veronica said, let's welcome Julianne Giuffre. Julianne has been in the financial industry for over 30 years, where she's amassed experience in sales, operations, and management. She's skilled at working with clients for the long run, as home ownership is a journey, and the process takes time and patience. She enjoys sharing her knowledge and finds great joy in helping her clients reach the dream of home ownership. Julianne keeps abreast of lending regulations, industry trends, and market rates, and she participates in ongoing training related to first-time homebuyer mortgage programs and grants. Welcome, Julianne.
Hi. It's a pleasure to be here tonight. Very excited. This is something that Veronica and I are very passionate about, helping people become first-time homebuyers. So we hope you'll take away a lot of good information tonight to help you start on your journey.
I love it. I love it. Thank you. And finally, please welcome Dwayne Carroll. As a licensed realtor, Dwayne Carroll is proud to be a supportive and thoughtful real estate agent specializing in guiding first-time home buyers through every step of the home buying process. With over 15 years of industry experience, a deep understanding of the market, and a passion for helping clients achieve their home ownership dreams, he provides expert advice, strong negotiation skills, and unwavering support. Known for patience, professionalism, and a client-first approach, Dwayne takes pride in making the experience smooth and stress-free. Whether educating buyers on financing options or finding the perfect home, Dwayne is dedicated to delivering exceptional service and lasting relationships built on trust and success. Welcome, Dwayne.
Thank you very much. I'm honored to be here tonight, and I look forward to giving my little spiel on the home buying process.
Wonderful, wonderful. Well, let's get started. We have obviously incredible experts here, so I'm going to go ahead and share the SONYMA mortgage information.
Thank you, Elizabeth.
Absolutely.
Great. Good evening again, everyone. Thank you so much. And, thank you to Immigrant for inviting us, SONYMA, to be with you tonight. Thank you to Schneps. And most of all, I applaud all of you that are here tonight with us because, again, you're taking those first little steps towards achieving the dream of homeownership. I know that days are long and between work and school or whatever your endeavor is, it takes a lot to take some time out in the evening to be able to do this. But again, I applaud you for taking the time to taking these first steps towards the dream of homeownership. So once again, I'm Delphia Munoz, and I am the Business Development Officer with the State of New York Mortgage Agency, or better known as SONYMA. If you're looking to purchase your first home, hopefully you'll think about SONYMA. SONYMA provides down payment assistance, below market interest rates, home renovation financing. If anyone on the call happens to be a veteran, first and foremost, let me thank you for your service. We provide special veterans programs. All of our programs are available for 1 to 4 family homes, including co-ops and condos. Next, please. So who are we? We've been around since 1970, and our mission is to provide safe, affordable, and sustainable home ownership opportunities to moderate income households in New York, primarily focused on first-time homebuyers. So I should tell you that for SONYMA, a first-time homebuyer is someone who has not had ownership interest in their primary home in the last 3 years. Perhaps you bought something previously and sold it more than 3 years ago. For our purposes, you are still a first-time homebuyer. All of our programs are available through a network of participating lenders. And Immigrant happens to be one of our great partners. They're one of our participating lenders. They've been doing SONYMA for a very long time. But for a full list of our participating lenders, you can go on our website, which is sonyma.org, and be able to see all of our participating lenders there. So for SONYMA, you cannot apply to us directly. It has to be through one of our participating lenders. And why SONYMA? We provide various mortgage programs, primarily, again, targeted for first-time homebuyers in New York State. You can purchase anywhere from Staten Island all the way to Buffalo. Next, please. So our programs are primarily the two really primal programs are our low interest rate program and the Achieving the Dream program. Homes for Veterans program, as I mentioned before, the VA happens to have its own program, but our Homes for Veterans program is for the veteran and their family, not just their spouse, unlike the VA program. So the veteran themselves don't even have to be on the mortgage. As long as they're going to occupy the property and be on title, your family member gets the same benefit. We also have a great program called Credit is Due, which I'll tell you a little bit more about. We have a program that's Remodel New York in case you happen to purchase a home that needs renovation, that allows you to put the repairs into the mortgage. For upstate communities, we have a program called Graduate to Homeownership, and that's for recently graduated, folks that are looking to purchase their first home that recently graduated from college. Next. So all of our programs have income limits and purchase. So as I mentioned, we have the two main programs are Achieving the Dream program. If you're looking to purchase in the 5 boroughs or Rockland County, and you're a household size of 1 or 2, whatever the makeup of that household may be. 1 or 2 person household could be a single mom and a child, a couple, then that income limit would be $149,080. If that same household has 3 or more persons that will be occupying the property, again, whatever the makeup may be, maybe it's a single mom and 2 children, then the income limit goes up to $173,930. So that's the income limit. If you're looking to purchase in Long Island, again, the income limit's there for 1 or 2 person households, $149,950 and $179,940 if it's 3 or more. We also have income limits for Westchester, and as I mentioned, for any of the other counties in New York that you're looking for. You can always go on our website, again, SONYMA.org, to be able to see the income limits for all the other counties. Our low interest rate program, which I always say is named incorrectly because it really isn't our lowest interest rate, that has a little bit higher income limit. So if you're looking to, again, stay within the 5 boroughs or Rockland County, 1 or 2 person households, the income limit is $186,360, and 3 or more person households is $217,420. Long Island is $187,440 for 1 or 2 person households, or 3 or more person households, $218,680 in the low interest rate program. So I should tell you that right now our Achieving the Dream program is 6.125. It's 30 years, it's fixed, right? Our low interest rate program is at 6.75. So again, that's why I say it was named incorrectly, because it's not our lowest interest rate. Our purchase price limits for both programs, again, this is for the 5 boroughs as well as Long Island. If it's a single family, which includes condos and co-ops, then the purchase price limit is $1,179,090. 2 family is $1,509,720. 3 family, $1,824,810. And 4 family, the purchase price limit is $2,267,890. Next, please. So what are the benefits of SONYMA? SONYMA programs have overall lower overall costs and payments compared to other first-time homebuyer programs, including FHA. So remember that SONYMA is state, FHA is federal. It's not a bad program, but you will have higher costs associated with an FHA mortgage. So for instance, if you're putting less than 20% down and you need something called private mortgage insurance, with SONYMA, it will go away as soon as you reach that 80% mark. With FHA, it really doesn't go away. So it's going to be a little bit more expensive. Also, you're going to have higher closing costs with an FHA mortgage. SONYMA also has flexible credit options and less restrictive guidelines and opportunities, especially through our Credit is Due program. Next, please. So our Credit is Due program is a program that we rolled out about 2 years ago. It's a new program for historically underserved communities, households of color, minority households. Just like with all of our other programs, SONYMA does not have a minimum credit score. However, with that being said, with all of our other programs, we do expect that the borrower or borrowers have at least 3 trade lines, whether that be traditional, which is what's on your credit report, or non-traditional, where you show us that you pay your utilities on time, or you pay your rent on time, pay auto insurance on time for the last 12 months. With this program, however, if you have no other credit, but you can show us that you pay your rent on time for the last 12 months, this program allows you to move forward. This program provides up to $30,000 that you can use for down payment or closing costs, or a combination of both. Just like with our other down payment assistance program, which you'll hear about as well, it is completely forgiven after 10 years. If you sell before 10 years, there may be what we call a recapture on that. So if you keep the home for 10 years, it's a gift, you never have to repay it. The statistics show us that the average first-time homebuyer remains in that home for 9 years. So at that point, you really have nothing much to pay back. The best example I can give you is we gave someone $12,500, and they sold in 3 years, and they made a profit, because it's always based on if you make a profit. If you sell before 10 years, they paid back $2,500. And that's because every time that you make a mortgage payment, a certain percentage of this down payment assistance is forgiven. This program right now allows possibly up to a 2% off the prevailing interest rate based on your need to qualify. So if even after putting $30,000 down and perhaps any other grant, you still don't qualify, then we start to look at reducing the rate by 0.25% intervals up to 2% to see to get you to the point where you can qualify. So, Veronica will tell you a little bit more about what the bank expects or what they're looking for. But most of the time, right, they're going to look at your housing payment divided into your total monthly gross income. That number should not be more than 40% for SONYMA. And then they're going to take your housing payment plus your debt and divide that into your total monthly gross income. That number should not exceed 45% either. So 40 on the housing and 45 on with the debt added. This program allows for alternative underwriting guidelines. So for applicants or borrowers who have had some credit challenges in the past. So as I mentioned, perhaps you have no credit, but you can show us that you paid your rent on time for the last 12 months. This allows you to move forward. This program also allows for, hopefully you all have your money in a secured account. And Veronica can tell you, most and all mortgage programs, except for this one, do require that you have your down payment in an account and saved over time, right? This program allows for what they call mattress money, money that you can't really source, that maybe you have some money under your mattress that you're using for down payment. Again, this program allows for it, but as I mentioned, hopefully all of you have it in a very safe place. Next, please. So some of the additional benefits of SONYMA is that you can benefit from down payment assistance, which is less money out of your pocket. Our regular down payment assistance program is 3% of the purchase price, up to $15,000, that you can use again for down payment or closing costs, or you can even use that 3% to eliminate the PMI or the private mortgage insurance if you're putting down less than 20%, right? So you can use our 3% to do what they call a single premium and not have to pay that on a monthly basis. At this time, we have a program called DPAL Plus. That program also offers up to $30,000 for down payment. There is limited funding available for this program. This program has the income limits must remain under the Achieving the Dream program, which are the lower income limits, and the property cannot be more than $500,000. So that's on the DPAL Plus program. Next, please. So, there's an old saying that says that you buy the house that's in need of repair, right? Location, but if you're looking for a particular location, best location, then you look for the home that maybe needs a little bit of work, some repair, some tender love and care. You've all seen HGTV, where you buy the house that needs some work and you make it into your dream home. Our program, Remodel New York, allows you to finance the cost of repairs into the mortgage. If you were to purchase a home and then get a loan to repair the home, it's going to be a lot more, much higher interest rate and for a much lower term. This program, as I mentioned, allows you to put the cost of repairs into the mortgage, does not increase the rate because of it, and again, gives you that greater affordability and that option to perhaps buy the home that in the area that you like and maybe do some tweaking. SONYMA understands that it's hard enough to come up with a down payment these days, especially with the kind of rents that the borrowers pay, let alone to, again, be able to save for a down payment. That's the reason why we have down payment assistance, as well as the option to be able to put the repairs into the mortgage if you need to. Next, please. So our programs are designed to work well with any other available grants or assistance that may be available to you as a first-time homebuyer or available in your community. Immigrants happens to be one of the great lenders at doing the Homebuyer Dream program, which is another grant that can be matched or again added to our down payment assistance, which again gives you a greater affordability, right? So we allow the ability to stack the different grants. Next, please. So once again, homebuyers need less of their own money when they're doing SONYMA. If you are purchasing a one-family, a two-family, or a condo, then SONYMA's requirement is that you have at least 1% of your own funds into the transaction. If you're purchasing a three-family, four-family, or a co-op, then our requirement is that you have at least 3% of your own monies into the transaction. The rest can be using our down payment assistance or any other grant that may be available, or even if you're fortunate enough to have a family member that wants to give you a gift for down payment, right? Or to help purchase your home. So again, as long as you either have 1% of your own, depending on the property that you're purchasing, or 3%, again, depending on the property, you need less of your own money to be able to do a SONYMA mortgage. Next, please. So all of our programs require homebuyer education. And of course, homebuyer education is available in your area. There's a slew of great housing agencies, right? HUD certified housing agencies, nonprofit agencies that offer homebuyer education. They are usually the experts at being able to locate any down payment assistance that may be available, any grants that you may qualify for. Next, please. So how do you get started? You attend a homeownership counseling, right? It's, like I said, he usually runs the gamut of being able to tell you from the beginning to the end what to expect. And again, you would meet with the loan officer to get pre-approved. Most realtors, and the realtor will tell you, won't even take you out unless you have a pre-approval in hand. They don't want to waste your time and theirs. You don't want to fall in love with a property that you basically wouldn't be able to qualify for. So it's a really important thing to get pre-approved. Again, I've worked with Veronica for a very long time. She's great. She's very patient, and she's really good at being able to help navigate what programs are available and what would be best for you. Next, please. So this is our QR code. This is our 800 number. Our next slide will give you my personal information, which is my email address as well as my cell phone number. My hope for all of you is that you obtain all this information and you're able to make a really great decision, and that you're able to move forward with the dream of homeownership. It's an amazing feeling when they give you your keys for the first time, but it is about doing it in a safe, affordable, and sustainable manner. So thank you so much for your attention, and I'm here if you have any questions.
Thank you so much. That was wonderful. And I am going to share her information, her contact, so that you'll be able to get in touch. That was really fantastic. So now we're off to more incredible information. So stay tuned just 1 second. I'm going to share our next deck. And I'm going to turn it on over to Julian.
Yes.
Julian, are you up?
Okay. So we're going to talk about my favorite subject, credit, because a mortgage is only about 3 things. It's really very simple when you break it down. It's about credit, it's about your income, it's about the property. You are in charge of all 3. So let's get to the first and most important part, the credit. So it all starts with your credit report, and we're going to show you in these slides where to get a copy of your credit report if you don't know where to get it. So let's take a look at this next slide. Your credit report is made up of 2 things. The report itself, which is all the information, and then you're going to see the scores, which are based on what we see with the credit, but also some of your personal information has effects on this. So what you want to do is send for a copy of your credit report. And again, we're going to show you where to get that. But what you'd like to do, if we go to the next slide where you see your identifying information, look at how many times your name appears. What are the iterations of it? Try and keep your name to the way it appears on your driver's license. That is what makes sense. Then also on the report, we're going to see your debt. There might be some bills on there. There might be child support. There might be a divorce settlement. All of those things are going to be there. There might be public records on the report also. And when your credit is run, a hard pull for your credit, we're going to see all of the inquiries that have been made on your credit. So the 3 nationwide reporting agencies are Equifax, Experian, and TransUnion. Those are the 3 that you're going to see. And the other thing to keep in mind is when you look at Credit Karma, The credit score that you see will never be the credit score that the bank sees, because when a bank pulls credit for a mortgage, different criteria is used. So if you see 800 at Credit Karma, we are not going to see 800. We're going to see something in the sevens. So you need to keep that in mind. They're two different things. Something you see for Credit Karma and the criteria that's used when we pull credit for a mortgage. So we're going to go to our next slide, and this is what your credit is about. 35% of it very heavily weighed with your payment history. Then the amount that you owe. If someone gives you a credit card and the amount that's available to you is $1,000, they don't want you to use more than 30%. That's $300. So when we're done with this call tonight, over the next few days, check on all of your credit cards, see what your limit is, see where you are in that limit, and then start to make your plan if you're over 30% of trying to get the cards to 30%. Don't focus on paying it to zero. Focus on getting to 30%. Then we're going to look at how much is new credit, what's the length of credit. If you have some cards that are older, don't close them. If you haven't been using them, go buy a tank of gasoline so that there's some activity on it. And then we're looking at the mix of credit. So you'd like to have, in a perfect world, 4 pieces of credit. Don't go and get 17 credit cards. You don't need it. 4 pieces of credit. A-tier credit is key. A-tier credit is credit from a bank, a Wells Fargo, a Chase, Visa, MasterCard, Amex, a car loan. Those things are A credit. When you go into Victoria's Secret and you get a credit card, that's B credit. That's not A credit. And if you go into Victoria's Secret and they say to you, no, if you don't have a card with us today, but if you shop, we're going to give you 10% off. You might get 10% at that moment. But when the bill comes, if you don't pay it 100%, you didn't get 10% off. You just got a credit card that has an interest rate of somewhere between 29.9% and 39.9%. So you just paid 20, 30, or 40% more for that item that you thought you were getting 10% off on. So let's be mindful. Let's be mindful of our credit, how we use credit, what's happening when people extend credit to us. In a perfect world, we'd love to see a credit score that's over 740. And we can certainly work to get there if you follow along with what we're saying tonight. 700 to 739 is average, 699 or below. We want to do some work there. Just as an aside, SONYMA does not have credit score requirements. However, if you're not putting down 20% and you need mortgage insurance, the mortgage insurance will be affected by what your credit score is. So we want to work to get to that 740 and better credit score. But that's not, the end of the deal. So next we're going to talk about a hard pull versus a soft pull. When Veronica and I do a pre-approval, we are going to do a hard pull on your credit because we have to see the credit. We don't know where we are without the credit. A soft pull occurs. Sometimes you'll get something in the mail and you wonder, oh, why did these people send this to me? When you get a credit card or something, there's something in that language, which none of us ever read, that allows them to do a soft credit pull behind the scenes. It does not impact your credit, but it is one of the things that drives all the junk mail that's in your mailbox. That's where that comes from. So don't worry about when you see that. But a hard pull for your credit, just like if you go to shop for a car, when you walk in a car dealership, they immediately want to pull your credit because they want to know, should they talk to you or not? Do not allow that. You don't let anyone run your credit until you're ready to do something with them. We don't want everybody running our credit. Let's take a look at our next score. So then here's how you get a copy of your credit report. There's a few different things that are on here. You can go online. You can mail to them. You can call them. Be sure you get all 3 because there will be slight variances of what is reported to them. That's why you see the different scores. Get all 3. And when we're working with it, let's make sure our name appears the same way on all 3. If your childhood home address is on there, let's get rid of that. Try and make everything what's current in the most current 2 years. That's where we want to go with this. And you should get a copy of your credit report at least once a year, or when you've made some major change that you know impacts your credit. We want to take a look at it. So let's take a look at our next slide. So we want to be sure that we are working with our credit, because remember, credit tells the story of you. An underwriter is not going to speak to you personally. Veronica and I are going to talk to you. Dwayne's going to talk to you. The three of us are going to talk to you. The underwriter is not. When an underwriter looks at your credit, they look at the story of you. You tell the best story you possibly can. That's what we're going to help you do tonight. Get a copy of those credit reports. Then you want to take a look. What's your name look like? What does the address look like? What does your job look like? Let's make sure we're up to date. Then we're going to look at what's our mix of credit. If you don't have some A-tier credit, let's go get an A-tier credit card at Wells Fargo or Chase or B of A. And then you want to maintain your old accounts. So if you have an account but you don't use it, you don't want the credit report to ever say closed by grantor, because we think there was a problem. What you want to do is keep it active. If you want to close a credit line, make sure that it's reported closed by consumer. That means you decided to close it, not someone else decided to close it. If you have some things on there that may be dings, don't be afraid to call and ask for a goodwill deletion. It can happen sometimes, and it's not guaranteed, but if you don't ask, you will not get it. No one's going to knock on your door and say, "Can we take that away?"
Do you help people with this? Like if they come to you and they want to work with you, is this something that, you know, as you're working to try to get a mortgage, is this something that you can help people understand and fix? And
Yes, yes. We like to do it all the time. That's why we like to look at the credit up front, because if we need to get in position, we want that roadmap of how do we get in position? What do we do? It's so important, especially for the people that want to buy a co-op. As Dwayne will tell you, the co-ops, they are looking at your credit report. They're never going to look at our credit report. They're going to run their own. So of course, they're going to see a higher score usually than we do. But even though people don't realize this, when you get car insurance, you own the car. Do you know that they run your credit report, and how much you pay for car insurance has what your credit score is, has some determination on what you're paying. You want a job? They're going to run your credit report. So that's why you want to look at that credit report. You want to make sure it's accurate. You want to look at it at least once a year. But if you have credit issues, let's start with that first, and then we'll go forward. But as you can tell, this is something I really love to
oh,
do.
it's great. It's great for people to realize that that's the first thing you need to do is get together with your lender and go over your credit and be prepared to do what
Absolutely.
needs to be do so that you can get the best rate. And you know, that's, you don't wait till you find the perfect house, right? You find the
Absolutely.
perfect lender first.
Absolutely. And then, everyone doesn't need to have credit. I mean, this is America. If you want to travel and rent a car, if you don't have a credit card, you better be ready to take the bus, walk, or some form of public transportation. But if you want to rent a car, you better have a credit card. But that said, let's say that is not what you want to do. Then let's build alternative credit. If you're going to show us your rent, or you're going to show us your electric bill, your utility bill, whatever the bill is, be sure that that bill is billed to you. Your name is on the bill. How you pay it, the check, your name is on there. You don't give the money to your cousin and they make the payment. That doesn't count. It needs to be proof you paid it. So your checking account with your name, you're paying a bill that is billed to you. So believe it or not, they'll even take a gym membership, but whatever you're showing us, it is something that must be paid monthly, that's billed to you, that you pay with funds that have your name on it. So that said, Veronica will take you through the pre-approval process, but remember, everyone who's on this call, do not hide from credit problems. Let's step up, let's handle it.
Great advice. Great advice. Thanks,
Thank you,
Julie.
everybody. So
Thank
this
you.
comes to pre-approval. So before we talked a little bit about the pre-approval, I want to explain that there's a difference in between a pre-approval and a pre-qualification. So most of the agents, real estate agents, and sometimes the seller would like to see a pre-approval, but a pre-qualification is basically subject to the sky being blue. It doesn't, they don't run your credit, they don't look at your income documentation, and it's just a piece of paper that says that you're pre-qualified. A pre-approval is something that is so important because that tells you exactly where you stand. Now, there's things with a pre-approval that you don't have, and we don't have any and basically, if the rates go up, that pre-approval may change. If the property that you're looking, the taxes may be higher, that pre-approval may be changing too. So the pre-approval is just a roadmap of what you can afford based on the circumstances that we're talking. So the next slide, please. So decide when you want to get a pre-approval. I mean, I've talked to a lot of people and Julian too, and we basically sometimes say, are you ready for the pre-approval? Because it's about getting ready for the pre-approval. It's not then, oh, let's get a pre-approval. We need the pre-approval right away, because there's little things that you need to take care of before the pre-approval process. And credit, like Julian said, is one of the most important things. Let's fix the credit before we go into a full-blown pre-approval. We don't want to run a credit and then your credit score is in the low 600. That's going to affect your pre-approval. So it's so important to take care, to do all this, information up front before we start the pre-approval process. If you go for a pre-approval with a lender and you're not very happy and they're not taking care of you, you can go somewhere else. Pre-approvals are free. Nobody should be charging you for pre-approvals. And the credit part, we can help you with the credit. We can guide you. We're not credit counsels, but we definitely, with our years of experience, we can help you understand what you need to do to either fix your credit or to improve your credit or to, get your scores up a little bit. Because remember, your scores are important. We look at the middle score, and if it's two people, we'll take the lowest middle score. So if one is 640, but the other one is 720, we'll have to take the 640. So this pre-approval sometimes is, you have to put it on the back burner because we have to work on your credit. We have to work on you saving a little bit more money. We will have to work with your employment. The next slide, please. So these are the very important things. When you are going as a first-time homebuyer for grants, it's a very different process than when you're just going as a regular mortgage and you're not looking for grants. We need some additional information. And a lot of people say, why are you asking for this information? The Bank A didn't ask. Well, did Bank A give you the opportunity to get your grant? Oh, no, they don't have any grants. So that's the big difference. When we do a pre-approval, we look at the grants requirements. We know what we're doing. We know what to ask. And 3 years of the most recent tax returns, because we need to make sure that you haven't owned any property in the last 3 years. So important. 3 years of your W-2s, written explanation of your employment. Again, we need a 2 year of employment, full-time employment. If you're working part-time, we may not be able to use it because you've only started that part-time job. So Julian and I, that's our job to explain to you why we need this documentation. We need bank statements. Again, every deposit that is not payroll, we need to know where it's coming from. We need to make sure that there's no additional jobs that you didn't disclose. Copy of your driver's license. Make sure that it's up to date, your driver's license. Copy of divorce and separation agreement. If applicable, we need to make sure if you have to do any alimony payment or child support payments. An explanation of derogatory. These grants require every derogatory must be explained. Again, we are the ones that are going to explain why we need it. And maybe you give us an explanation that is maybe not sufficient. We'll say, okay, let's go back to the drawing board. Let's help you out. So we do a lot behind the scenes that we help you. We don't want you to go and get a pre-approval and it's not what you're looking for. So there is a lot of preventive medicine that we do here. So any large deposits, if you have, nowadays you have a lot of deposits from Venmo and all other kinds of deposit, we need to explain where those deposits are coming, that they're not coming from an additional job. Processing may require additional. So sometimes one door opens another door of explanations. So, be prepared. But that's our job, to hold your hand through the process. The next slide, please. These are the 4 capacities that you need to remember. The capacity is the income. We need to see your employment history. We want to see your savings and your debt. The capital, we want to see, do you have the money? Where is this money coming from? Are you getting any gift money? We're going to basically walk you through that. The collateral is the property. We're going to look at the appraisal, and we're going to make sure that the value or the price that you're paying is what the value of that property. And credit. Again, that credit keeps on creeping up on us, and we need to make sure that that credit is ready for a pre-approval. And we want to make sure that you don't do anything during the pre-approval that will affect you later on. The next slide, please. So this is, as a mother, I have my dues, and you can't do this and you can't do that. So your dues, keep an ongoing paper trail. We want to see any bank deposits. If you gave a bank statement and now, some time has gone by, we may ask for an updated bank statement. Provide money deposits and receipts, maintain an employment. We want to create the savings plan. We want to understand, your credit pools. Please don't open or close any accounts during the application process, because that may affect your credit. Don't make any large deposits. Don't change jobs. Please don't do that. And don't make any major purchases. Don't go and buy that beautiful car that you want. Let's wait for a little bit until you close. But don't panic. This is what we do. We help you. We hold hands. We basically walk you through it. We don't leave you on your own. So many times you call these companies and then you can't get that person again. So the next section is the grants. So Emigrant is approved for SONYMA, obviously, for the down payment assistance. We also offer the Homebuyer Dream Program, and we also are approved for the CHI. So the next slide, please, is going to explain what Fannie Mae. So Fannie Mae has allows a low down payment. It's basically a little bit more lenient from other programs. You can go as low as 3%. And the next slide, please. The Homebuyer Dream Program. So Homebuyer Dream Program allows you different, depending on where you are. So we're going to ask for your income. We're going to ask for who's going to be living in the property, because there's 2 ways that we're going to qualify you. The person that is going to qualify you for the mortgage, and the household income. Who else is going to be living in with you in that property, and what is their income? So the Homebuyer Dream Program is different from SONYMA because the Homebuyer Dream Program ends August 29th, and it's first come, first serve. So once we exhausted all the monies that we have for the Homebuyer Dream Program, unfortunately, we can't give any more monies. SONYMA is all year round. So the next slide, please. So they help you with the down payment. So remember, you need to have the monies for the initial down payment when you go to contract. If you have to have 3% down, that is the money that you have to have up front. So if you're going to take it out of your retirement account, you need to take it out up front. These grants were going to help you at closing for down payment and closing costs. And that's where we help you understand how much money you need for the rest of the down payment and how much money you need for closing cost. So we're just going to skip a couple of slides. If you can go to the last slide, because we want to give some time for Dwayne to speak. So this is before, if you, that's it, that's the one. So this is perfect. This gives you the 3 different programs. The Homebuyer Dream Program, depending on your income and where you are with the household size. we give you $15,000. If your income is a little bit higher, then you fall into the HTP plus, which is 7,000. And if it's a wealth builder, is 10,600. You can combine this with the SONYMA down payment assistance. So Julian, do you want to quickly say about the CHI, and then we're going to give the floor to Dwayne?
Yes, CHI, Community Housing Innovations. They operate in Westchester and Nassau and Suffolk County. And I encourage everyone to reach out to them because their grants are based on household size and income size. The least amount of money they give is $25,000, the most is 60. Just for simplification, I'll say if you get the 60,000, 30% goes for down payment and closing costs, and the other, 30,000 would go for down payment and closing costs. The other 30,000 is for, we call it freshening the property. We'll do some work, maybe we're going to replace a sink or a toilet, reface, but most of the time we buy all new appliances, we'll paint, we'll do floor treatments, but it is a fantastic opportunity. And I encourage everybody to reach out if you're not aware of them. And Veronica and I will happily put you in touch with them. But don't leave that money on the table. It's great.
Absolutely.
Fantastic. Thank you so much, Veronica. That was wonderful. Now let's turn it over to Dwayne.
All right. Thank you again for everyone for being on tonight's webinar. I'm going to talk quickly about the home buying process. So we can go right to the next slide. That's my contact information. All right, so a quick review. So the home buying process is a large, lengthy, detailed financial transaction. It's probably going to be the largest financial transaction you're going to make in your life, or you might make it more than once. It will undoubtedly be the largest. So with that said, we're going to go right to our bullet point, which is why using a buyer's agent is important. So why would we want to use a buyer's agent when buying our first home or any home? For some of the reasons I just mentioned, right? We're about to enter into a large, detailed financial transaction. We're talking about large and small sums of money changing hands. We're talking about working with a number of different professionals, a number of different legal documents and contracts, in addition to very, very, very detailed negotiations. The seller has someone sitting on their side of the table looking out for their best interest from the beginning to the end of that process. So you absolutely want the same. So let's move on and talk about the current state of the real estate
I
market.
just
And
want
as
to
it
say,
says right there,
it is so important to have someone you trust and that you think about having, because it's so easy now, I feel like, with people going on Zillow and this and that, and they think it's so easy to do it themselves. Listen, I've made the mistake of buying a house without my own agent, and I really missed a lot of things that caused me a lot of sorrow afterwards. So you are
yeah,
1,000% right, Dwayne.
it states that, I think the statistic states that 90% of home buyers and sellers who try to do it on their own don't come out ahead, right? So
No.
you do want to use an agent. So again, let's talk about the state of the real estate market. As it states right there, it is a seller's market. It has been for several years. It will be for the foreseeable future, and that is due to supply demand, right? So if you have been paying attention, you know that supply, right? Our inventory, especially in New York, real estate is hyper local, has been really low, and demand has been really high. Even with the recent, elevated interest rates that we've been seeing, there's still a good amount of demand. So what does that mean? It means there are no steals and deals in this environment. It means if a homeowner, excuse me, is listing their house for sale at the fair market value, they're likely going to get that number and perhaps a little better. So expect some competition out there. There might be multiple bids on a property that you are interested in, especially if it is located in a preferred town or it's in very, very good condition. So what does that mean? That we need to be realistic and open-minded buyers when preparing for our first home purchase. So over the last couple of years, I've had a number of buyers come back to me, and some of these people I had worked with years prior, and they were finally ready, 2-3 years later, and they're shopping and they're online. They say, Wayne, I can't find a house in my neighborhood I used to be able to. And that's because affordability in New York has gotten out of control. So what I would suggest to them is to go back online, whatever site they're using, whether it's Zillow or Realtor, and say, hey, go back into your search and increase the price search by 30 or 50 or 70. If inventory begins to show up, likely because you might have been priced out of that neighborhood and you can no longer consider that first choice in the neighborhood or town that you have been thinking about. You might have to consider a second or a third choice, or might need to consider a new town altogether, again, due to these affordability issues we've been dealing with in the New York region. So let's talk about, what does that mean? That means, right, we got to be realistic and open-minded, right? We have to think about, a new town perhaps to consider if, again, where we're searching, we're just not finding inventory, right? So one of the other options we might have is a different type of home purchase type, right? So let's just say we are seeking a 3-bedroom single family home, but a 2-bedroom condo might work for us. It might be something you want to consider if that's, again, going to work for you or your family. Or perhaps if you're seeking a 2-bedroom condo and a excuse me, 1-bedroom co-op or 2-bedroom co-op might work for you because they're priced cheap. It might be something you want to consider, right? So we've got to have you got to be flexible in your home search, specifically because the market we're dealing with right now is very, very challenging. So let's move on, talk about some things to consider when buying your first home. So we got to think about our budget, right? When you're working with the lenders, over at Immigrant Mortgage, as Veronica and both mentioned, right, they're going to be going through a lot with you to make sure they understand and make sure you understand your financial picture. All right. So they want to make sure that you are creating a roadmap for yourself that makes sense. So you have to think about not just your housing budget, but your overall budget, because again, the lender is only going to take into consideration your credit report items, right? So they're going to be looking at your car payment, your student loans, your personal loans, your credit cards. But as we all know, there are a variety of other expenses that, right, we're going to have to absorb, and we currently absorb, in our current daily lives. So, that might be, Wi-Fi and cable, that might be cell phone bills, auto insurance, all things that we have to take into consideration. Outside of that, right, we're also going to remember we might be renters, right? So we have to be prepared for maintenance and or repairs on the home, right? So again, we're in an apartment and you have a landlord and they are responsible for all the utilities and responsible for all the maintenance, right? This is going to be a new world for you. You're going to have that, that mortgage payment, right? It might not be, as large as your current rate payment, but you are also going to have now your own utilities. So, electric, heat, gas, and water might be things that you have to be prepared to absorb yourself in addition to maintenance, right? So again, it may not be a case of calling your lord and saying, hey, my stove is not working. It might be you, hiring a repairman or having to go out and replace your stove. So those are some things to consider when purchasing your first home. You also want to think about the neighborhoods, right? As I mentioned a little earlier, affordability, right, is an issue in New York. So a lot of individuals have been forced to consider towns they were not familiar with. So if that's the case, right, you want to do some research. You want to know what the schools are like in these towns. You want to know if there's daycare services, if that's something your family need, or perhaps, religious institutions, again, if that's something your family need. You also want to visit these towns, again, especially if you are unfamiliar with them, on different days and different times of the day, to see if that town is going to be a vibe, right? If it's going to work for you and your family. So all things to take into consideration. And then lastly, I just want to mention commute times, right? So you might work, close to where you live now, and you're looking to purchase a home, especially when this applies, especially to single family homes. But, we all know affordability, right, starts to improve as we move further away from the city. So if you're looking for a place in Westchester, we know affordability is going to, come into play as we move toward north toward Upper Westchester. And if we're looking again for affordability especially on a single family home, because we know the inner city is expensive, especially Queens, we might want to move into Eastern Nassau or even to Suffolk County, right, to find some affordability, which might impact your commute. So that is something to think about as well. So last bullet point there is how to get started. Now, this has been kind of the overwhelming theme of tonight's presentation, right? And that is to be prepared, right? Know how much home I can afford and why this is important. This is your blueprint, right? Because once you have that conversation, you understand your debt and income scenario after talking to, Julianne or Veronica, you know where you can go from there, right? It's going to tell you, okay, can I consider that first choice home? I'm sorry, that first choice neighborhood, or do I have to think about a new neighborhood? Can I afford a 3-bedroom family home, or do I have to think about a 2-bedroom condo, right? So know how much home you can afford. This is an important first step. And then lastly, just remember, be realistic, be open-minded, and stay positive.
I love it. Great, great, great advice. And so it's really about working with your mortgage team and your lender, really, to find out, work through your credit. But, that's kind of seems like number one, work through your credit, find out what kind of programs you can work with, figure out what you can afford, and then working with, finding a real estate person, like professional like yourself, Dwayne, who can walk people through what they can afford and what they can find and give them suggestions of different neighborhoods. That's terrific. Thank you so much for sharing all
Absolutely.
that.
Mhm.
This has been excellent, excellent information. I know that we have a lot of people chomping at the bit asking some questions. I can tell Jennifer right now, we are going to be emailing you're going to get a link to the entire program here, the entire webinar. So you'll be able to see all of this at your leisure. So not to worry about that. And then we have some other questions here. Let me get to some of those. So Jonathan said, did you say that SONYMA mortgage insurance would drop when you reach 80% equity compared to FHA?
Yes, correct.
Great. Someone thought maybe they misheard. So, okay, terrific. And Malcolm wants to know, what are the income and lending limits on the CID program?
So the income limits would be the same as, because with the credit is due program, it's either the Achieving the Dream or the low interest rate. So the income limits are the same as in those two programs, and the purchase price limits are the same.
Terrific. Naya wants to know, what about rent history? I've lived in the same building for 7 years, and my landlord started reporting rent payments on credit reports this year. Does rental longevity make any difference?
Yes, definitely. We view the rental as pristine. So because that shows that you have the discipline to repay where you live, and that counts tremendously. So we will need to see at least 12 months of cancel checks. That is if you're living in a building, or if you're living in a private home, we may not be able to use that rental history. But if you're living in a building and you're paying the HO, directly to the management company, then we'll be able to use that.
Terrific. Rebecca wants to know something about credit. If my name appears differently on my credit report, should I and can I get it fixed? For
Yes,
example, one line shows my full middle name, another only just shows my middle initial.
you can. That's why we want to get the credit report and we want to clean it up. And as I said, the best way to use your name is how it appears on your driver's license. So those can be deleted and corrected. Absolutely.
Terrific. And is that something that you can walk people through when you work with them?
Yeah, but that is something you can do very easily on your
Oh,
own when you get the credit report. That's really simple.
okay, wonderful. We have another question. Malcolm wants to know, what are the housing and debt to income ratios on the loans that you should be looking at?
In general, the guidelines are 40% for your PITI, principal, interest, tax, and insurance. That is the mortgage payment. Then you have the DTI, which is the mortgage payment plus your monthly required debt. Not what you pay, what's required. So if you are required to pay $30 to keep it, you send 100, we're looking at the 30. When we go to that, the DTI, that's your debt to income. That's the mortgage payment plus the debt that's required. That should be 45 or less.
Just a
And
quick
remember, we
reminder
work
that the
less.
principal, interest, taxes, and insurance, and the mortgage insurance. So mortgage insurance is based on your credit. So your credit score. So the higher your credit score is, the less of mortgage insurance. Again, that credit score comes back to bite you many
Yeah.
times. So it's really important to increase, because you could be paying $400 if your credit score is very low. So we don't want that. We want to help you out on that one.
That's really good. That's why pre-planning is so important. I put everyone's contact information in the chat, and I implore you, reach out to Veronica and Julian immediately, because as soon as you're thinking home ownership, it's the time to start looking at your credit.
Yeah,
Because that sounds like, I
absolutely.
mean, that just really is, we swear, every time we ask a question, I feel like it goes back to credit.
I know.
So, you know, you have that opportunity to do that. Taniqua wanted to know, how does getting a new job affect you if the previous job shows longevity? So you were saying, you know, maybe don't make changes, or, you know, do they look at longevity previous to your new job?
They're looking at a 2-year history, and we don't want someone to give up a dream job because we might buy a house. But we're going to let's say you do this in the process. Be prepared, because most of the time we're going to want to see 30 days of paychecks from the new job. Most of the time, if you're going to make a change, it's, in a perfect world, a W-2 job to another W-2 job. You're not going to become a commission salesperson. You're definitely not going to become self-employed, because we need a 2-year history of self-employment if you are self-employed. So people do change jobs. It's not ideal. Again, we don't want you to pass on your dream job. You might have a letter, the offer letter on a job. All of those things will have to take place.
Okay.
The other thing
Um,
that makes a difference, I just wanted to add, is that it can be a job change, but at least that it's in the same field,
Yes.
right?
ah,
So it's in the same
Mhm.
field, it's still a continuation.
oh, that's good to know. Okay. Jody said, I am not a first-time home buyer, but my fiance is. Would we still qualify for first-time home buyer programs?
So for SONYMA purposes, if, again, it would be the borrower who would be required to be the first-time home buyer, right? So that means that the fiance, if she has had prior ownership interest in the last 3 years, she would not be able to be on the mortgage or on the deal, but her fiance can, because he is a first-time home buyer.
What if what if you get married and one person never owned and one person did? Can you, are you eligible if only one of you is on the mortgage, or does marriage then kind of take you out of the,
Yes.
you can?
No, if right, if one person has had ownership, because again, remember, it's that you haven't had a home ownership interest in your primary home in the last 3 years, right? So maybe you did own something else, but it wasn't your primary home in the last 3 years. You just can't be on title or own anything else by the time that you close. But yes, if you have a scenario where you have husband and wife, the wife had previous home ownership, the husband is the only one who's going to go on the mortgage, right? We're still going to count her income because it is an income-based program, but only the husband is going to, because he is the first-time home buyer, he's going to be on the deal as on the mortgage and on the deed.
Got it. Okay. Someone wanted to know, you mentioned a goodwill deletion. Can you explain what that means?
So sometimes you might have a 30-day late on a credit card. And again, it's not a guarantee. But if you are looking at your credit report, or you know that you made a late payment, you should call immediately and see if that can be deleted, or hopefully not even reported in the first place. But that's a question you need to ask. It's not a guarantee, but if you don't ask, it will not happen. They're just not going to do it, because they'll say, well, oh, they were never late before, so let's not report this. That's not going to happen. You need to make the request. And if you're going to make the request, have a good reason, and you might want to point out how excellent your credit history has been, or your payment history with that company. But it's worth asking. It's worth the try.
That's really enlightening. In a million years, I would never think you could ask for that. But that really goes to show you that is true in life. If you don't ask, you don't get.
That's true.
But
That's
you know,
very
really,
true.
we could stay here all night, because there are so many questions, and there's a million questions one can ask. And I think, you know, as many people that have joined us, there are unique situations. And so, you know, I wanted to thank each and every one of you for being so generous with your time. I'm getting thank you, thank you, thank you on the chats here. And I am going to I did put in the chat, but you will all get an email tomorrow that will have everyone's contact information, that will have this edited and the recording of this. You can watch it again. You can share it with your community. You can share it with your family. We hope that you do. We want that you do. Everyone on here is passionate about helping first-time home buyers. Congratulations for taking the first step and being here. The next step is call Veronica, get started with your credit with Julianne, and then she'll hook you in with Delphia, and you'll buy a house with Dwayne, and this will have been a very, very successful night, right? But really appreciate all of you being here, appreciate all of your expertise. Thank you to all our attendees for joining, and wish you all the best of luck with your first home purchase, and look forward to seeing you at a future webinar. Thanks so much for
Thanks,
everyone.
Elizabeth. Thank
Have a
you,
good evening.
everybody. Have a good night.
Good night.